from starting your business, which is great. So what does your business do? Like, how do you help the average business owner?
Yeah, so I take them through the funding journey, right? Like, every bank isn't for everybody.
Welcome to ShiftRich Podcast. I want to thank my guests for coming out. We got Steve Heath on with us today. Steve, how are you doing, brother?
Man, I'm feeling well this morning. How about you?
I'm doing well myself. Thank you for joining us.
Absolutely.
So a quick backstory on you. You want to tell the people about, how you got started in business funding?
Yeah, definitely. So, my name is Steve. The name of my company is Legacy Consultations. And what I do is I specialize in helping business owners get funding for their business, right? There's a lot of misinformation on the internet. So I like to give people the truth to help them, get funding in a faster amount of time. I didn't just kind of fall into this. Like, my background is banking. I was in banking for 17 years. At my previous employer, I was number one in the entire company when it came to business funding. So it was just a natural transition to go from doing that from the bank to doing it for myself.
So you saw an opportunity to where you can do what the bank was doing and build a business for yourself, and that's how you got started?
Yeah, to a larger scale. Like, there were a lot of people that came in. A lot of them didn't necessarily understand even what business funding was, how to get it. Like I said, but the misconceptions, they're hearing things from YouTube University, this person online, and they're just taking this misinformation. Some of them qualified when they didn't think they did. Some of them thought they qualified when they didn't. So I was able to talk to them and kind of guide them through it, but I was really limited in only helping them in that certain area at the bank.
So what gave you the courage to go out there on your own and start, leaving the 9 to 5, no security, and taking that risk to really go out there on your own to, just change the course of your life?
Man, so a couple of things. One, since I was number one in the company, like, I dealt with a lot of business owners. I saw people coming in younger than me, older than me, but most of them, they looked like me. They had money, but even more important, they had the time, right? I'm working, I think, banking hour. I had to be there at 8 and we close at 6. So I'm pretty much all day. But they have the latitude to come in, right? I can't do that. I would, became friendly with a lot of them. I would see, they're out to eat together. I'm like during lunch. I'm like, if I wanted to join them, I had to ask my manager, can I have off this day to do it? That was one aspect. And then also, like, with the 9 to 5 thing, like, you have to be willing to play the game. And during COVID, the branches were closed. You can do transactions through the drive-through, or you had to schedule appointments for people to come in. So, you could kind of dictate how your day went. So I guess, to keep us motivated, what they would do is they would have, like, dress up day at the bank. Like, we grown people. Like, hey, everybody come in, wear an American flag shirt. Yeah, like, wear an American flag shirt, dress like a cowboy and whatever. And I just wasn't doing it. So, like, they would take pictures. Yeah. And after, like, the 6th time, I get called into the office. Right? Now, mind you, I'm not number one by a little bit. Like, when you look at the numbers, I'm more than quadruple the number 2 person. So
wow. Yeah.
They call me in the office, and I'm thinking this is going to be good news, right? I'm number one, like a raise, promotion, something. They're like, upper management is kind of concerned that you're not participating in, like, the dress-up day. And I'm like, you got to be kidding, right? Like,
so you're number one. Your sales are through the roof. Number 2 is a big gap between you guys, and they're worried about dress-up day with the grown man.
And I'm like, I'm killing it. Why am I even getting talked to about this? They're like, well, if you ever want to move up in the company, they want to see that you're into these things. And at that point, I was like, you know what? I can't. I don't want to play the game. I've done it before. I can't play the game. It just gave me that push I needed to get out. But I didn't just leave, right? Like, my business was created June 2020. I left July 2021. So I was working my 9 to 5, then came home, worked my 5 to 9. I did not touch a penny for that year from the business, right? I still lived off of the money from my job. So that way, when I left, I had a lot of money in the bank. So, if things didn't go the right way, if things didn't go well, me and my family were cool. We weren't struggling. Yeah, I had that security blanket. Like, so, like, yes, if you want to leave your job, cool, but you got to do it the right way.
Absolutely. Well, that's an amazing story. So you left your job after about a year from starting your business, which is great. So what does your business do? Like, how do you help the average business owner?
Like, every bank isn't for everybody. So, one is the first piece is education. I let you know if you qualify for
Yep.
funding, and if you don't qualify for it, what steps you have to take to get there. And then number two, when you qualify, I'm going to help you get the funding, right? It's not just, watch some videos and then go do it on your own. To me, that's not conducive for success. So everybody there, is part of my mentorship, I guess. I sit down with them one-on-one and build them a funding plan. It's customized per each individual. That way it can ensure success, right? I've been doing it for
Yeah.
at this point, 22 years of my life. I could roll it up my sleeve and, build funding plans. That I know for some people is new. So, I'm not going into it saying, hey, I need you to know what I know, right? We're going to get to that point, but I help them get the funding because in every business, you need the funding to be successful.
Exactly. Without the money, it's hard to really get your business going. I'm starting.
Yeah, I mean, I feel like you need three things to be successful in business. Like, I think of course, you need the knowledge, you need the drive, and you need the funding. And you need all three, right? Without the knowledge, you're not going to know what to do. Without the drive, you're not going to do anything. Without the funding, you can't do anything. So all three together, like that's the formula.
Absolutely. So what are some of the key things that the banks look for when let's say just say a new business is looking for funding? Like, what are the most important things that a new business needs to have?
All right, so people always focus on the credit score, and the score by itself means nothing, right? Banks are looking at your credit profile. They understand for a brand new business, obviously it hasn't made any money. So what are they going to look at to determine the risk factor? They're going to look at your personal credit history. Are you somebody who has a history of paying things back on time? Are you somebody who's had credit for a while? Are you somebody who's been responsible with higher limit credit cards? They look at the entire profile and totality to determine, one, if they can lend to you, and then also how much they can lend to you.
All right, so let's just say, for instance, like I have ShiftRich Academy. This is brand new. I just started it up. I don't have any business funding yet. So what should I do? Where should I go to get started developing business funding?
So it's really like three tiers of funding. Your starting place is always going to be your relationship banks, places that you already have an existing relationship with us, right? Like banks are like us, like Tommy. If you walking down the street and some random person said, "Hey, can I borrow $1,000?" Automatically you're like, no, like you're not even gonna think about it. Now, if somebody that you've known for a while asks you to borrow $1,000, you've known them for a while, maybe they've other people that you know lent money to them, they pay them back. Maybe you lent money to them in the past, right?
Yeah.
You might say no, but at least you're going to think about it, right? Banks are the same
Yeah.
way. The more they know you, the better the relationship, the more likely they're going to lend to you. So that's why when I said, like, every bank's not for everybody, like, there's going to be places that you can get funding from now that I can't, and vice versa, because of the relationships that we have with these institutions.
Got it. So bank with someone you know, like where you already go personally. Like if you're already going to Bank of America, you have a relationship built with them already. They know your profile. They know your lending history and things like that.
Yeah, exactly.
That's great.
Exactly. Your banks have they don't just look at your credit profile, but they look at your internal score with them, like what you have with them, and it just makes it more comfortable for them to lend to you.
Got it. So what are some of the biggest mistakes that entrepreneurs make when they're looking to get funding for their business?
Going to the wrong banks, right? You see online, people like, hey, go to this bank. They're going to give you $150,000 now showing documentation. Like, if it sounds too good to be true, it probably. So, I think the biggest mistake is not knowing where to go. Also, not knowing that you can leverage your credit at multiple institutions, right? Like the reason I was able to leave my job in a year is because my first week in business, I got 2 business credit cards, one for $20,000, one for $25,000, right? No clients. I had no money coming in. It's my first week. But because I had the credit and I had the knowledge, I was able to obtain the funding, which I was able to use to leverage. I think the biggest 2 things are just not knowing where to go, and then just not like they settled in one place. There's thousands of institutions out there.
All right. So what would you say if they just started a business, but the credit isn't that great and they need funding to get started with their business? So what would you say to that person?
One of the biggest mistakes you can make is trying to fund it out of pocket, right? If you fund it out of pocket, one of 2 things going to happen. You're going to use your personal credit cards. Utilization goes up, your credit score goes down, you can't get funded. Other option is using your savings. But when the 2 times you spend the most money in your business is when you start and when you're scaling. So when you're starting out your business, you're putting more money out, and the money's going out versus it's coming in. So now you're going to max out your credit cards, you're going to use all your savings, you have no money left, now you're in a bad spot. Start the business, but do not launch it until your credit is right. Like there's these places out there that say, hey, we'll give anybody funding. If they're not looking at your credit, then they are going to give you a ridiculously high interest rate. I've seen 50%, like APRs,
Wow.
and like some of the repayments are like I've seen daily repayments. I've seen
Daily
weekly,
repayments.
bi-weekly,
Wow.
daily repayments. So it's like because that's your only option because you don't have the credit, it's like they trap you. So
That sounds
get
pretty
credit.
predatory. Daily repayments.
Yo, daily, like every single somebody lends you 30,000, and every single day you have to pay them back. That's crazy.
Yeah, that's crazy. So has there been like one situation where it's like, all right, you had this one client that they really didn't have their situation in order, but you were still able to get them funding? Or what would you tell
I
someone
mean,
that,
if you
is
have
really
bad
not
credit,
sure how to get started?
yeah, if you have bad credit, you're just not gonna get funded. Now, I've had people that have limited credit, and what limited credit is like, yeah, you have some credit cards, but they're all low limits, right? So in banking, if you want higher limit business cards, you gotta have higher limit personal cards first, right? They want to see that you've already proven you're responsible with higher limit cards. So I've had people that their highest card might have been 3,000, and I tell them, I'm honest, like, look, you can get business funding right now, but you're only gonna get low limits, and if you're fine with doing that, by all means, like, let's help you get the funding now. My advice to them is let's build the profile first. Let's increase some of these cards that you have on the personal side. So now when you go for business funding, you're automatically eligible for higher limits. But if you have bad credit, the starting point is going to be credit repair. You got to fix your credit.
What about people with no credit? You want them to go out and get like the short-term secured cards first and then, build up their personal side, or?
Yeah, I mean, most likely if you haven't had credit and you're just starting off, it's like you're 18 again. You got to start
Yeah.
from scratch, which is going to be most likely getting secure cards. You'll get the secure cards, and you're going to use them responsibly. Use them for stuff you got the money for, gas, groceries, and you
Yeah.
pay them off. Build that repayment history. In about 3 to 6 months, that secure card will graduate to an unsecured card, and now you can start getting some business funding.
So get the secured card, build it up, show that history of repayment, and then about 3 to 6 months, go back to the banks and see. Is there an opportunity that you can go into the banks and say, hey, look, this is my profile. What can I be approved for? Or like without like having pretty much just asking them what I need before, they lend to you or anything like that?
They can give you a barometer. Like what a lot of banks do is they'll approve you for a percentage
Hmm.
of either your previous year sales or your projected sales. So, like let's take Chase and KeyBank, right? KeyBank can approve you for up to 10%. So if your projection or you made 100,000, the max that you're
Got it.
getting with them is 10,000. Where Chase can do 25%. So that same 100,000 with Chase, or that same 100,000 with Chase, you can get 25,000. So like you got to know the bank's rules, their exposures. You can ask them what your potential is. Now your potential doesn't mean that's what you're gonna get. They can lend up to 10%. They can lend up to 25%. That doesn't mean that's what you're gonna get, but it kind of gives you a good starting point. Like, okay, this is the
Yeah.
max I can get from
Yeah.
here
True.
versus the max I can get from here.
All right, so let's say like you don't have these relationships with these banks. Should you just go out and open up business checking accounts with different banks and open up, to go all out to all the different banks and just open up different accounts with them, or stick with a couple few?
The more relationships you have, the better. Now, I'm not saying go out in one day and open up 10 accounts. Like that's crazy. Maybe like two at a time, three at a time, and you want to do it with places that are in your footprint. Right? Footprint means if you're driving around your neighborhood, you're taking like a 20-minute drive, and you see these banks, you're in their footprint. These are places that you want to get the lending with. But you also want to do your research first, right? There's some banks that are more lender friendly than others. So if I'm driving and I see a Navy Fed, and I'm driving and I see a Bank of America, I know that Navy Fed is more lender friendly than Bank of America. So if I'm looking to start a relationship, I'm going to Navy Fed first.
So how would you know all that? Is that something you teach in your program?
It's absolutely something I teach in our program. I mean, without like just knowing it's really hard to know, right? Like you can't go on a bank's website and says, "Hey, we're not business lending friendly." Like they're not going to say that. They want the business. So it really comes with just knowing it, talking to people, trial and error. But I mean, at this point, I kind of know a good amount of them.
So the banks to go to and the banks to avoid, when a new bank business is starting up. Yeah. Yeah. So people out there, go talk to Steve before you start opening up these accounts. All right, for sure. It'll give you all the sauce. Give us some sauce, some gems that a lot of people don't know about if they're getting started in business funding, or if they already have like some established business funding, but they're looking for more. Like, what can they do?
So one of the things is like, if you want to get more funding, you have to know how to fill out the application properly. All right, that's you can go to the best bank. You can have a great credit profile. You can mess it up by doing the application incorrectly. So on the application, and this is strictly for credit cards, right, business and personal, when it asks how much the business has made, it's asking for a projection, right? So you don't want to project zero. Like you can't say,
Yeah.
hey, give me money, but my business isn't going to make anything, right? So you want to put a projection on there. Also on the application, it's going to ask you about how much money you make. There's the Card Act of 2009. There's a part in it that says on credit card applications you are allowed to include household income, meaning
Mm.
if you make 60,000 and your wife makes 70,000, on the application you can put 130,000, combining your household income. And what that does is it puts a wider gap between your debt to income, right?
Right.
People think debt to income is on your credit report. Your debt is on your income report or your credit report. Your income is based upon what you give them. So now, because there's a wider gap in your debt to income, that means you have more money left over after paying all your bills. That means they're able to lend more money to you. And another thing, let's see what we want to give them. What we want to give them. Okay, so there's some credit unions out there that will allow for multiple products with one credit pool. Right, so there's one
Ah,
like United States Senate Federal Credit Union. Right, you can get in no matter what part of the country you live in.
that like an online bank? Because I've never even heard of those.
It's based in DC, but
Okay.
you can get in it in Philly or wherever you live. Right, so with them, when they do a credit pool, that credit pool lasts for 60 days. Meaning anything you apply for within the next 2 months, it's going to be under the initial inquiry. So you can get a business line of credit, business credit card, personal line of credit. Like it's only going to be one inquiry.
If you have a new business and you're looking to get business funding, do you have to personally guarantee those debts,
Yes.
or
Yeah.
is there a way to get it? Because I've saw TikToks where you can just get it on your EIN and stuff like
Man,
that.
99% of us are going to be personally guaranteeing our entire life, right? Like, Amazon, Target, they don't have to personally guarantee because they can prove year after year their business model is successful. As a small business, you have a business making 7, 8 figures a year, you're still going to be PG in 99% of the time. This whole, you're going to get London just under your EIN, it's not true. So, you people out there that are spending money on net 30 accounts and building up your business credit, you don't have to do that. You don't have to have business credit to get business funding.
Got it. Nice, nice. All right. All right. Well, thanks. Well, tell the people about your program, what you have to offer, and where can they find you and things like that.
Yeah, so my Instagram handle is legacy underscore consultations with an S at the end. If you follow my page, you're not gonna see me, showing off jewelry or in front of cars and things like that. Like everything on my page is just information about credit and funding. As far as my program, it is a lifetime program. And what I do is my ultimate goal is to show you how to get funding on demand. On demand, meaning whenever you want funding, you want to know exactly how to get it. And I handhold you through the process. Like I said, I build customized funding plans for every single person that joins. Everybody's in the program has my cell phone number, so you have direct access to me to help you along the way. And I'm very hands
Nice.
on. Like, I feel like these programs like, hey, go watch these videos and take the information and apply it is just you can't be successful that way, right? I want everybody to
Yeah.
join the program and be successful. So I really invest a lot of my time because I know the more I give, the better your results, the faster your results.
So if you're looking for business funding out there, go to Steve, go check out his page, his IG page. And listen, the money's out there, right? We're going to the quarter 4. Like a lot of these banks, they got to give out this money, right?
The banks don't run out of money, right? And banks, everybody looks at the bank and says, hey, this is the place I get lender from. This is the place I can, store my money. A bank is a business, right? Every
Yeah,
business's ultimate objective is to make money. And bank's
absolutely.
biggest money maker is off of the interest that we pay on lending. So banks have to lend. If a bank's not lending, a bank's not going to be around for long. So yeah, banks, they're giving out money. They have to lend. And people like Tommy, people like myself, we're going to go get the money. But
Absolutely.
it doesn't run out, right? A bank doesn't say, all right, we have $10 million to lend this year. And when that 10 million is done, we're done. No,
That's it.
they're going to give out the money as long as you have the credit.
Well, Steve, I appreciate you joining me, dropping all the gems. Everybody, Steve's information is going to be in the description. Make sure you go check him out. Join his community if you're looking to build business credit for your small business, or if you're trying to build some more credit for your personal, whatever you need, Steve is the guy to go to. So once again, Steve, thank you for joining us. Any last words you got for the people or anything?
My thing I always say is don't be stagnant, right? Everybody has something they can do. If you have the credit, go get the funding. If something's preventing you from getting the funding, maybe something's wrong with your credit, whatever it is, high utilization, low limit cards, too many derogatory marks. Start working on that. But get the funding. It's not putting you in debt. The funding you want to target is revolving, so it's giving you the availability. But don't be stagnant. If you're just sitting around, 3 months from now, you're in the same spot that you are today. That's not good, right? You're always going to be able to make some moves.
Keep it moving. Take action. That's what it's about.
Exactly.
Steve, once again, thanks for joining us, and we'll see you guys next time.
I appreciate it.
Peace.